I have with me the Chief of Lloyd's, John Nelson, right here in the Congress Center, to talk about Davos 2015. So I do want to talk to you mostly about India, but I'm going to start first by asking you, from the insurance industry point of view, what 2015 is looking like at this point in the year.
Well, 2015 is going to be a very interesting year, because we've had in the specialist insurance sector, which Lloyd's operates in, the last 3 years we've had a relatively benign period of lack of catastrophes, so very major claims. So despite interest rates being low, profitability has been good. As we go into 2015, this success, driven partly by worldwide low interest rates, is attracting more and more capital into the insurance industry. So what we're seeing is much greater competition, much greater pressure on rates, particularly in the reinsurance sector. And we are seeing the arrival of significant amounts of alternative capital who are attracted by the returns, and also by institutions looking at insurance as a risk which isn't correlated to other investment classes.
What is the risks I wanted to bring up with regards to 2015 is the geopolitical risk, and how you measure that and what that means for your business and therefore your outlook on 2015.
Yeah, I mean, there is clearly an increase in geopolitical risk over the last 12 months. We can see that with Ukraine, the Islam problem and so on. But I think that what that tends to do is to depress growth. It depresses confidence. But it's a patchy picture. If you look at the United States, you can see high levels of confidence, you can see growth, you can see the signs of some tightening going on, monetary tightening. You look at the UK, much smaller economy, again, confidence remains surprisingly high, and that's mainly because the structural deficit in the UK is being seriously addressed. In continental Europe and the EU, it's of course a different picture, and that is a real challenge, because the EU now has got to become more competitive. It's got to reform so that its economy becomes less burdened with regulation and so on. We have the news today probably of quantitative easing coming, and so that's a sign. And in the growth economies, the developing economies, we've also seen some slowdowns, and yesterday we heard Premier Li in China talking about the expectation that we should expect slightly lower growth from China. I personally don't think that in the long term I'm too concerned about this, but there's no question that geopolitical risk is dampening economies down a bit.
The other industry I wanted to bring to you was the aviation industry. We've had some very unfortunate incidents take place over the last year or so, and I was curious to understand what it meant for insurance risks and costs for the aviation industry globally. Well,
we've had 3 tragic accidents. They are tragic. Lloyd's is the leading provider of aviation insurance. If you look at, though, the incidence generally of air accidents versus the volume of flights being taken, there has been a massive improvement in performance over the last 10 or 20 years. So I'm afraid, given the volume of aircraft movements, there will be accidents. That is why we have insurance. But I don't see any systemic problem here. Obviously, it's a wake-up call both for airlines and indeed for insurers in terms of what the risks are.
Let me talk about India. You met with the finance minister right here in Davos. What did you talk about? How encouraged are you by the India investment climate and the fact that we just have a new insurance law passed via ordinance or executive order?
Yes, I mean, I think that what is welcome is that the Indian administration is clearly keen on the idea of liberalising the Indian economy. They see the benefits of liberalising foreign direct investment in terms of economic performance in India, reaching the more challenged parts of the communities. And I think we obviously believe that very strongly. In insurance terms, I think the benefit of liberalising insurance will be it will bring more capacity into the Indian insurance market, particularly in specialist difficult risk. And if you think about it, India is exposed to ranges of natural catastrophes, be it earthquakes, floods, whatever. And that is, and India is a country which is significantly and seriously underinsured. And it's been proven time and time again that greater insurance penetration creates greater sustainability for economies, also greater economic growth. And I think it's an excellent example of an industry which, if it was liberalised, would actually help the Indian economy. And the other point is that if you are looking at very big major risks, diversifying risks away from the domestic economy so that you have international funds coming in to repair, that is also good for economies. And if you look at countries like New Zealand, who had the terrible earthquake in Christchurch, that was largely insured internationally. So we were able to get the area back on its feet quickly, and the economy has performed very well. The same would be true, for example, in Thailand with the Thai floods, which were insured. The plants around Bangkok were insured. Again, they were back on their feet fairly quickly.
Does this ordinance that allows for the increase in foreign direct investment from 26% to 49% impact you directly? Because your business model is a little different from how we would talk to other insurance companies. So I'm just curious to know, what impact will it have on you outside of just opening up the insurance business and raising, sort of the competitive landscape?
I think for us it's a symptom that the government are absolutely serious about enacting the bill. And in talking to Minister Jaitley yesterday, I think his expectation is that the bill will be passed, hopefully, during the course of the first half of this year. We very much hope so too. We are not, as you're quite right in saying, we're a market, we're not a company, so we are not, as it were, buying shares, and there is a separate chapter in the bill for Lloyd's, which allows the market to enter. So we very much look forward to that bill being enacted.
So if it is enacted, as the Minister expects and all of us hope it does, how will it change or enhance your business activity in India?
It will allow us to operate in reinsurance onshore in India. So it will allow us to bring our managing agents to the Indian market. It provides them with a facility to operate physically in India, which I think will add to the capacity of these specialist areas which India so badly needs. It will bring, hopefully, also expertise in these areas. It will create stronger relationships with carriers. I think it will be good all round.
Would it entail a large investment on your end to be able to do this in India?
Well, in a sense, what it is, from our point of view, it's an enabling bill. So it enables the market to operate. The extent to which there is investment will depend on the degree of business that's actually written. And we hope and believe that that business will grow significantly as a result.
So if I've understood this correctly, it will allow companies to be able to reach Lloyd's services much easier because you will have onshore agents.
Correct.
Is that's a fair assessment of how this will work?
And it will also put underwriters in countries. It will put the managing agents in the country. Yeah.
If India is able to walk down this path of opening up its insurance industry in a smooth fashion, do you expect India will become one of your major markets in the years to come?
I have no doubt. I mean, if you look at the scale of the Indian economy, of the growth countries, it is closing up on China. So it's a huge opportunity for everybody.
Mr. Nelson, thank you so much for your time. I know you have a very busy schedule. Thank you very much for sparing a few minutes for us.
Pleasure.
Thank you.